Hi there, I'm your host Spencer Walsh, and today on the show we have Jarrod Yahes, the CFO of Shutterstock. Shutterstock is one of the leading digital content marketplaces, and in this conversation, we discuss the history and growth prospects of their core marketplace, how generative AI is impacting the business, and the rationale behind the company's recent acquisition of GIPHY. I hope you enjoy.
This interview is for informational purposes only and should not be relied upon as a basis for investment decisions. The host, Spencer Walsh, also serves as the managing member of Generative Capital LLC, an investment advisor based in San Francisco, California. All opinions expressed by Spencer Walsh and the guests in this interview are solely their own and do not necessarily reflect the opinions of Generative Capital LLC or the companies at which guests are employed or affiliated. This interview may also contain statements that are considered forward-looking under various securities laws. These forward-looking statements are based upon current market conditions and assumptions and involve risks and uncertainties that could cause actual results to differ materially. Generative Capital LLC and its clients may maintain positions in the securities discussed in this interview, and nothing herein should be construed as an offer to sell or a solicitation of an offer to buy any securities. This interview does not intend to be complete or entirely accurate on any topic addressed, and the information discussed in this interview is provided as of the date of its publication and will not be updated.
Jarrod, it's great to see you again. Thanks for making the time to do this interview.
Thanks for having me, Spencer. I look forward to it.
So I want to break this conversation up into three sections. First, I want to discuss Shutterstock's core digital content marketplace. Second, I want to discuss how generative AI is impacting the business. And third, I want to discuss Shutterstock's recent acquisition of GIPHY. So let's start with the core digital content marketplace, which obviously represents the vast majority of revenue today. So, and for the purposes of this, let's try and completely set aside AI to the extent that's possible. I know AI kind of dominates conversations regarding Shutterstock and is impactful to the business, but let's set that aside for now. So first question, in a little context, it seems like content marketplaces, particularly digital content marketplaces, historically have been quite attractive businesses. And John Oringer founded Shutterstock, built it into an 800 million plus revenue business while retaining 30% ownership personally. And, the Getty family's done something similar with Getty Images. Adobe's done something similar with Adobe Stock. So historically speaking, why were digital content marketplaces such attractive businesses? What problems were they solving, and why were they able to generate such attractive economics?
Sure, Spencer. I think, when we look back over time, there's been meaningful growth in stock content over the course of the past 20 years. What has happened is the types of content that are needed for enterprise marketing have changed and evolved. There's been a growth in the content types from stock imagery and stills that were sort of the original use case to the use of video, music, special effects, and 3D models. So I think one of the things you've seen is content types diversify and expand. We've also seen what I would call the velocity of digital marketing continue to grow. And so there's an expression which is that a successful Facebook ad lasts about 6 hours. So you can imagine how long an unsuccessful Facebook ad lasts. That kind of velocity, and when you think about all the different channels that are used for digital marketing, whether it's the programmatic ecosystem, whether it is the walled garden ecosystem, social media, creates a very significant demand for new creative. And that creative is typically customized by channel and by geography, according to a marketer's needs, and by new customer segment. And so the growth of digital marketing and the velocity of digital marketing, I think, is something that clearly has been powering our industry for a number of years. And the last piece that I would mention is the democratization of creativity brought about by the simplicity of design tools. You no longer need a PhD to be able to manipulate images, to create videos. Design tools have become easier to understand over time. They've become more templatized, where 80 to 90% of the work is done for you upfront. And more recently, generative has had an impact on the simplicity and ability to manipulate content. And so it's become easier for everyone, those in the marketing department and with a graphic design background, and those not in the marketing department and without that type of background, to be able to participate in creativity and the production of digital marketing. And so when you think about content types evolving, when you think about the velocity of digital marketing, and when you think about the simplicity of today's design tools, I think those are three trends that have really powered this industry forward over the course of the past decade and made this really into quite an attractive business and end market.
How analogous is Shutterstock's business model to other online marketplaces? There's a lot of just highly profitable, highly successful online marketplaces in a whole bunch of different categories. How's this analogous in terms of you've got all this digital content out there? You need platforms that can aggregate supply. You need platforms that buyers can go to where they know they can access content. Like, how is this analogous to other online marketplaces out there?
I think there are a lot of similarities. The most successful, largest business models in this industry are two-sided marketplaces that have thriving customer communities as well as thriving contributor communities. And if you take a step back and look at both sides of Shutterstock's business model, we have a large, thriving contributor community. Last quarter, we disclosed about was 2.7 million active contributors. We've seen the growth of that contributor community over time, and we've also seen that contributor community contribute more content year after year, really driving a very significant increase in the supply of content in our marketplace, such that we're touching 750 million overall assets. That kind of diversity of content and the availability of the content and the ability to index and search that content really makes a compelling supply for our customers to find exactly the perfect piece of content that they're looking for.
Go ahead.
The flip side of that, Spencer, is the customers come to where they find the perfect piece of content. And so we have almost 2 million customers that are buying, about 50,000 enterprise customers, and a long tail of small and medium-sized business customers that are out there downloading and consuming videos and images and 3D models and music. And when you put these two together, you see that flywheel start to spin, and you see both the supply and the demand start to expand, and the leaders in the space tend to get larger, because they're the places where the greatest economics are available if you're a contributor. And the customers come because they recognize that having a thriving contributor community really provides them the type of content that they're looking for. So I think there are a lot of similarities between the stock content two-sided marketplaces that have been successful and other two-sided marketplace concepts, and that network effects truly apply.
Okay, all right, that's helpful. So based on Shutterstock's guidance for 2023, based on my math, shares trade at roughly 6.5 times adjusted EBITDA, roughly 10 times free cash flow. So, those are very, very low multiples relative to other, call it online marketplace businesses, which leads me to believe investors are questioning the health of this business. So in your view, is Shutterstock's, we know this was a good business historically. I think investors are questioning whether it's a good business going forward. And once again, trying to set aside AI from this, is Shutterstock's digital content marketplace an organically growing or declining business, and why?
Sure. And Spencer, first, I think I'd correct you. I think you might be a turn too high in terms of the EBITDA multiple that we're trading at today, based on our guidance. But that aside, our business does have organic growth in it today, and we expect it to have organic growth in it on a go-forward basis. The industry, we believe, is growing 5 to 7%. We believe this is a $6 billion TAM. And there's no reason to believe that long-term, Shutterstock shouldn't grow at or above the rate of that industry growth, as we have been doing over the course of the company's history. We've historically been a share taker. The industry has stabilized and matured over time, but there's no reason to believe that this shouldn't be organically a growth business this year and for years to come. The sources of that growth are changing and evolving. And so there are faster growth content types. We're excited about some of the opportunities that present themselves, for example, in 3D. We just announced some partnerships in the area of River, which is really the conversion of video content to fully scalable 3D models. And we believe that could be a really exciting content type in the future, powering e-commerce applications, gaming applications, metaverse applications. And we're really pleased to be at the forefront of both 3D and bringing Nerf technologies and Nerf content types to market. We're seeing a lot of growth and demand for both music and video, particularly among enterprise customers. As advertising and digital marketing becomes more video-centric, and video is obviously a higher CPM ad format than static display advertising, we're seeing a strong demand for stock video content as well as music content that pairs perfectly with those videos for applications such as YouTube and connected television advertising. Those elements would be powering more of the growth, whereas traditional stock imagery would be slower growth at this point in time, and we'd see a gradual commoditization of that part of the business over time, which is countered by some of the exciting growth that we're seeing in other newer format content types.
I think most investors understand and probably believe in this dynamic of there's more digital content created every single day. There's more digital ads created every single day. Their need for digital content grows. So I think people believe in the tailwinds behind the growth of digital content. I think where maybe they lose a little faith is how the growth in digital content translate to growth in Shutterstock, revenue and free cash flow. And so how does that translate? Obviously we need more digital content every year, but like from a business model standpoint, does this translate to, you believe Shutterstock will have more customers going forward? You'll have more spend per customer. And I know you've got paid downloads and subscriptions, but how does this translate to kind of the KPIs in your business? And how do you view those evolving over the next couple of years?
Yeah, I think, Spencer, it's a fair concern, because if you look at the growth in digital marketing over the course of the past 20 years, and you think about this as a $300 billion TAM and end market, most of that growth and that TAM has accrued to the very large technology platforms such as Google and Meta.
Yeah, too.
And they're the proprietary distribution channels that command the lion's share of the CPM associated with digital advertising. The creative element of the digital advertising is probably less than 10% of the ad spend. And then the content used in the creative is probably less than 10% of that. And so there's a portion of the overall digital marketing economics that trickle down to content providers such as Shutterstock. That said, we do believe that there are significant opportunities for us. So number one, we believe that there's a tremendous opportunity for upsell, cross-sell across content types. Today, we are seeing more demand for different types of content from our customers that have never used, for example, video or music or special effects or 3D models in the past. A car configurator 5-10 years ago was a truly novel creation that would cost millions of dollars on the back of a new product introduction. Today, the idea that a new product SKU should be in 3D, should be able to be turned, opened up, reviewed and looked inside to have a much more experiential content touch point is almost becoming expected. And the cost of that have come down very, very significantly. And so we think that this idea that our customers are going to want more and different types of content from Shutterstock is really a trend that's going to be powering our business. We do think there's also a fairly sizable service and tooling trend that can power our business. So, for example, on the SMB side of the market, there's a demand for self-serve creative tools that has been growing exponentially. On the one hand, these are template-driven design tools, examples being Adobe Creative Cloud Express or Canva Pro. But very quickly, these tools are evolving into tools that use generative AI. Things like the magic eraser, things like how to automatically remove a background, things like how to generatively expand from a small purview. And I think Shutterstock has been really at the beginning stages of beginning to combine these tools with our content. First with our acquisition of PicMonkey in 2021, but we will soon have expanded that PicMonkey capability into generative editing. And so we're very excited about the ability to bring news and content together for our customers to grow those relationships. On the high end of the market, customers are looking for services. And so our studios business has really benefited from customers coming to us saying, "Can you do virtual 3D production for us in a way that's flexible, in a way that leverages your contributor community, and in a way that leverages the existing stock content that you have in our marketplace?" And so we are seeing that tools and that services opportunity paired with the content and the varying content types as a really strong growth opportunity for us. All of this is ultimately going to drive up the annual revenue per customer and our ability to grow with our existing customer base.
Okay, that was really thorough. So if an investor was just going to look at your financial statements, though, so I mean, you just outlined a pretty exciting kind of growth opportunity for the business, but an investor just looking at your financials might play devil advocate and say, "Hey, if I exclude some of these AI data deals, which we're going to touch on here, so I certainly see the opportunities there. If we excluded those, revenues I think declined maybe 6% year over year in Q2. So how do I reconcile kind of exciting growth prospects with kind of weakness on the revenue side, particularly in the e-commerce segment? I know enterprise segment's doing much better than e-commerce currently, but how do you reconcile the two? How does that resolve itself?
Sure. So I think, a couple of things, Spencer. I think number one, our guidance calls for 5% revenue growth at the top end of our guidance this year. And so single digit growth, I think we'd like our growth to be faster. And there's a number of things we're doing in our business, but we are growing this year. We grew last year. We've consistently been a growth business over the 11 years that the company has been public, and I don't expect that to change. Secondly, when you think about our mandate and how we're creating value for shareholders, we're also very focused on driving free cash flow and EBITDA growth. 2019, this was a business that did $96 million of EBITDA. Look at our guidance this year. It's almost $250 million of EBITDA. How many businesses out there have grown their EBITDA by 250% over the course of the past 36 months and trade for 5.5 times EBITDA? There are very few. And so we are very focused on growing our revenues. We're very focused on expanding our profitability and ultimately driving free cash flow production for our shareholders. I think we've been very successful in that endeavor. The sources of our growth have been uneven. And on the one hand, this year, we've seen businesses that are looking for Shutterstock's metadata to train their generative AI models. We've seen that absolutely take off. We've seen that business grow from $5 million of revenues in 2021, $20 million of revenues in 2022. And this year we discussed that being a $70 million plus business. So that business is effectively more than tripling over the course of a year. We're very excited about that. There's a number of investments we're making in order to capitalize on what we think will be a big trend around data, clean and ethical data for generative AI model training. Flip side of that is we have seen weakness in our e-commerce business, which is our business that caters to small and medium-sized businesses. That weakness started out in Europe with the advent of the war in Ukraine. We saw our European results weaken over the course of 2022. That's continued on into 2023, and some of that was compounded by currency issues. We've seen the U.S. more recently become weaker. We've attributed that to some reductions in marketing spend in the back half of last year. We're fairly significant spenders in terms of performance marketing to drive traffic to our site and garner conversions. I think we probably let our foot off the gas a little bit too much in the latter part of last year. And so included in our guidance this year is a significant step up in marketing to get that business back to stability and ultimately get it back to growth. And so we have no reason to believe that our e-commerce business is not a growth business. We expect that business to get back to the historical growth trends that it's been on. And we think there are some things we could have done better from an execution and conversion perspective that we're going to endeavor to fix in the coming quarters.
Okay. So I guess to sum that up, you probably attribute the recent weakness on the revenue side, XAI deals, to macro and some execution issues that you would expect to revert at some point back to, a longer term trend line. Is that a fair summarization?
Absolutely. Yes.
Yeah. Okay.
And but we've been reluctant to put a definitive date on when we see that turn. We'd prefer to wait and see, several months of improved trends, and then we'll be talking to folks about, exactly when we get back to growth. But I don't think there's any reason to believe that growth won't ultimately return to the business.
Okay. So before we get to AI, I do want to touch on competition here within the digital content marketplace ecosystem. So there's a lot of competitors out there, fewer competitors of scale. There's kind of, three main players, I guess I'd say. So, we previously mentioned the two other large ones, which is GIPHY and Adobe Stock. In your view, how do you differentiate versus them? And what would you say is Shutterstock's competitive advantage relative to your competition?
Sure. So I think, when we think about why customers go to each of the major competitors that are out there, I think we all have our own particular strengths. Adobe is well known for their tools, and they built the business on the back of creative design tools for professionals. Getting Images is known for its editorial content, which is particularly valuable to the publishing community. And Shutterstock was really the port of call for digital marketers and people who are looking for creative content for digital marketing and digital advertising in the programmatic ecosystem and social media, as well as in other broad-based digital marketing, such as websites. I don't think that has changed. I think we really do have a strength in terms of the size and scale of our content that's available for digital marketing. The size of our library is unparalleled amongst our peers. The disparity between us and our peers becomes even more apparent as you start to look into different content types, such as video, music, and 3D, where our offerings are scaled in a way that our competitors are not. And we also believe that we're bringing to bear a great combination of content with some of the features and functionalities that creatives are looking for, i.e. they're looking for a lightweight DAM to catalog and store their content. They're looking for easy-to-use design tools so that they can manipulate photos without having to leave the platform. They're looking for a search capability that is intuitive and really built for digital marketing and advertising. And we've been working on that and honing that and really leveraging our metadata to make sure that we index and serve up our content in a way that is effective for digital marketers to find exactly what they're looking for as quickly as possible. When we survey our customers, it means the ability to find the perfect piece of content very quickly and efficiently that rises to the fore in terms of their priorities when they come to Shutterstock. And so, that's where we've been focused, and that's where we believe that we provide an enhanced value proposition as compared to the competition.
Okay, that was I like the way you laid that out. I guess honing in on Adobe in particular, I'd certainly put Adobe on the list of companies I would like to not be competing against in general. And they've obviously, you outlined, their kind of core competencies on the software and tool side. But their Adobe Stock business, which they've used their kind of creative suite to cross-sell in short, has grown very quickly. I mean, they disclosed, I think, $200 million in revenue and May 2018 up to $500 million in revenue last year in 2022. So still, a ways to go to Shutterstock and GIPHY, but certainly growing the fastest. So kind of two questions just as it relates to Adobe, which is how large of a competitive threat is Adobe? And secondly, with some of the investments you guys have made on the tool side, particularly to SMBs with Creative Flow, and it sounds like more recently some Gen AI tools in partnership with OpenAI, is there any shot that you feel like you're leveling the playing field with them a little bit, or is that, wishful thinking on the really low end of the market?
Sure. So I think, the way that Adobe has historically thought about their stock offering since their acquisition of Fotolia in 2015 is effectively an upsell cross-sell. So if the design tools are the hamburger, the stock content's effectively the French fries. Would you like fries with that? So it's an add-on, bolt-on offering. We all price fairly comparably, and so we're really trying to differentiate on value and not necessarily on price. I think they have done a very good job in really continuing to drive innovation around their tools offering. What they have not done as good of a job in is innovating in the stock content area. So they are weaker with respect to various content types. The size of their image library is smaller than the competition. Their video library is significantly smaller than the competition. And they don't really have a presence in other areas such as 3D models, special effects, and other areas like the competition does. It's symptomatic of what happens when a company gets acquired by a much larger company where software is the core and the content effectively becomes a little bit of the laggard from an innovation perspective. And so it's not surprising to see that happen. That being said, they are still in competition. They're strong in the design tools area. What they've done with bringing Firefly and introducing generative editing is truly exciting. I think you're going to see us follow on with some very exciting generative editing tools that we talked about during our second quarter call. We already have some of that in beta testing with our clients, and it's very, very exciting to be able to bring features and functionalities to our customers that are very competitive with what a much larger company has in such a short period of time. So we're thrilled to be able to effectively replicate what they've done and even add some new and differentiated features for ourselves on top of that. Their business is growing fairly quickly. But that being said, when we were at that size and scale, we were growing, faster as well. I think there is a little bit of, law of large numbers that starts to kick in as you approach $900 million of revenue as compared to, say, $300 to $500 million of revenue. So there's a bit of that as well.
Okay. Makes sense. So moving on to, the topic du jour, which is generative AI, and not to downplay the impact there. I know it's impactful to your business, it's impactful to a lot of businesses. So, but maybe before we try and predict the future here, maybe we start with, what we know, which is, in short, how has AI impacted your business to date? And let's start on the positive side. You mentioned a little bit of it earlier. You guys have talked about it quite a bit in the last couple of earnings calls, but kind of just for the audience, how has AI impacted positively your business to date?
I think the first thing is both prospective as well as existing customers are using our generative AI capability to create de novo images from text prompts on our platform at scale. As at the last quarter, we had over 35 million images that were created on our platform. Some of those images are making their way into our library to the extent they're worthy. It's exciting to see people really experiment creatively with what we believe is an exciting new content type. And so we are seeing that engagement and experimentation, both from prospective customers as well as from existing customers. And that excites us, and we want to encourage that and continue to drive that forward to be the place to go to experiment with generative AI for creatives. What we're not seeing a lot of today are customers consuming and downloading that content and deploying it for their core use cases around digital marketing and advertising. And we're seeing download rates that are far below traditional stock content, which really leads us to believe that while customers are enjoying exploring the capabilities of this new technology, either because the outputs are not photorealistic enough, or because of concerns around indemnification and intellectual property rights, we're electing not to download, consume, and deploy that generated content. And so There's a number of things that we're doing on our side to try and change that. We're improving the quality of the outputs. We offer our enterprise customers today providing indemnification as an offering in order to get them comfortable. But today we're seeing a lot of experimentation of this new content type, but not a lot of deployment and usage of the new content type.
And obviously, you guys are now bringing in quite a bit of revenue or a significant chunk from licensing your metadata and your image library and content library in general to some of these large language models in order for them to use for training purposes. Talk a little bit about that business, kind of what your expectations are from a size perspective this year and the coming years.
So we're really excited to be in the position that we are in. One of the things that we're seeing is there's a clear shift on the part of large technology platforms. Regardless of where the courts and the legalities come out, where they're electing to use licensable training data for their own generative AI products. There's not a single large technology company out there that is saying, we are going to use screen-scraped open web data to train our models without the permission of the contributor and without paying and remunerating a contributor to build generative AI products. And I think that's an amazing shift that's really taken place over the course of the past 6 months. And these large technology companies are really thinking about the long-term economics of their business. They're thinking about their own brand equity, and they're basically electing to go with licensable training data as opposed to screen-scrape data for training their generative AI models. Shutterstock is a unique beneficiary of that trend. When we started working with OpenAI in 2021, they were first in their determination that training their model with properly licensed data was critical to the long-term sustainability of the product that they were building. After that deal was announced, we saw a lot of interest come in from other companies that were also building similar generative AI products. We did a deal with LG and entered into a partnership with LG. We entered into a partnership with Meta that we're quite excited about. Several other social media companies have become our customers. We more recently announced a generative 3D offering where we're jointly partnering with NVIDIA with what will be the first of its kind text to 3D model generator available to customers, where the outputs will be both structured and textured and available in some of the newer 3D formats such as USDX. And most recently, we announced a partnership with Google. We're very, very excited that Google has selected us for using our content for a range of different purposes. And we couldn't be any more pleased with the way that the customers that are selecting us are playing out. Ultimately, there are very few places where licensable metadata at scale can be acquired for generative AI. And we believe that we are very well positioned to be able to capture what could be an exciting large TAM over the years to come. Our expectation for this business this year is that it's going to more than triple as compared to the prior year. We're seeing the average deal sizes go up significantly. The average deal size has more than doubled from last year to this year. We're seeing customers engage with us with multi-year contracts. These contracts have been 5 years in most instances. Some have been longer, some have been slightly shorter. And we're also seeing clients really seek to get the range of content assets from us for generative AI model training. So it started out as interest in image metadata, has really morphed into interest in video metadata, 3D model metadata, as well as music metadata. And so we're seeing a real land and expand opportunity within these customer sets. What we have not done thus far, and that we are going to endeavor to do, is to make our data more broadly available. Thus far, there is no self-serve or marketplace availability of our data. You can access our metadata in the various cloud ecosystems that exist out there today. We don't have what you would think of as a mid-market or a broadly available product. You'll notice all of the companies I've mentioned are extremely large technology platforms that can pay significant premiums. You should expect us to come to market with a product that is more broadly appealing to the range of companies that are seeking to create generative AI products. So this is an area of investment for us. It's certainly a very exciting area for us. We're thrilled to be building up what is effectively a new business and a new industry, and we're very focused on this as a way to provide value for Shutterstock's customers.
And it's obviously an exciting piece of the business, and as you alluded to, it looks like that this year you'll bring in somewhere north of $70 million in what is high margin data license revenue. Looking forward for the next couple of years, it seems like when you think about whether that revenue stream grows, stays flat, or declines from here, and you just think about the growth potential of that business in general, it seems like it's a little dependent on how many companies out there are going to build these foundational large language models, aka is this something that every enterprise is going to be training their own models on specific sets of data for specific use cases, or is everyone just going to be licensing one of 10 large language models, all of which you may have as customers today already? How do you see that play out, and do you think that is that a key question in determining whether this revenue stream has big growth potential ahead or not?
I think you hit on a very important point, Spencer. So I think the ultimate size of this TAM and the ultimate growth potential of this TAM is going to hinge on the diversity of customers that are choosing to own and manage their own intellectual property with respect to generative AI. To the extent they're managing their own models and customizing those models with first-party, their own, and third-party data, that will benefit Shutterstock. And so one of the things that is really playing to our favor right now is we strongly believe the cost of running and managing your own generative AI model and customizing that model is going down precipitously. If you look at some of where the VC money is going and where some of the M&A trends are, we're seeing a number of deals where the company's thesis is to lower the cost to allow a company to run its own and customize its own 3D model. This is not going to be the case that only a handful of companies can afford to own and customize this intellectual property. This is going to be the kind of thing where the cost of the compute is going down, the cost of the model. Many of these models are becoming open source in almost an extremely fast period of time. That's amazing to watch. And really the piece that's less readily available is third-party data. Third-party data is really the scarce resource as compared to the model and ultimately the compute. And so we do believe that we think of our data as a very valuable and scarce commodity, not too different from the lithium that powers electric cars. And when customers come to us and we diligence our business, and they understand the way that we're remunerating contributors for their data, and they understand the way that our data ingestion works, they ultimately get comfortable that this is the most clean, licensable, and ethical way to procure data for generative AI model training. And they seem to really be looking at us as a long-term partner for their data needs for many years to come, not just to train models today, but to train them long into the future.
I think it's going to be fascinating to see if, going forward here, if enterprises end up training their own open source LLMs using either their own proprietary data sets or licensing it from third parties for kind of use case specific functions. I it's just an anecdote. I was at dinner with a friend at a software company, and they had a big, pretty much AI project. They went to one of the large cloud vendors and said, we want to run this using your LLM and using your cloud data centers. And they were pretty much told, the cloud vendor said they didn't have the capacity to do it. They said a lot of their capacity is big GPU shortage, and a lot of the capacity for these NVIDIA chips is spoken for by large customers. And so they actually used an open source model, trained it they bought some of NVIDIA's chips directly, trained it on, I think, some H100 chips using their own data set, brought their open source LLM back to the hyperscaler and said, hey, this uses 1/100th of the compute that your, call it, cross-functional LLM uses. And they were able to run it in short. And so it's one interesting application of an enterprise who is going to be training their own open source on data, whether it's their own data or, in this case, if it's generative AI related, potentially data from Shutterstock.
Yeah. You have to believe that all of the industry applications for generative AI are not going to be readily available in a turnkey fashion from the cloud providers. In that, whether it's in the healthcare industry, whether it's in the mobility industry, whether it's in industrials, that there are going to be business and industry vertical specific use cases where companies are going to need to bring their own data and pair that with third-party data and do that in a way that the cloud providers are not, it doesn't make sense for them to do it at scale because these are very niche applications. And our hope is that our third-party data will be readily available for those industry vertical use cases and applications. And I think today it's only available in direct enterprise relationships with Shutterstock. We hope in the future our data will be available where people are purchasing their data today, which is largely in the data marketplaces of the large cloud services providers. So you can't purchase our data except by coming directly to us. We're going to aim to change that, in the future.
Interesting. On when you look at Shutterstock's library of content, and I guess let's just start on just images and videos, maybe. What percent of it is, call it, photorealistic content versus artistic or creative content? And the line of the reason I'm asking that question is what you alluded to earlier. A lot of these Gen AI models are great at creating images. Probably the most challenging images to create are photorealistic images, just because you've got to get every tiny detail right. Otherwise, humans think they look really, really bad. If a hand's missing a finger or teeth look a little bit off, that's a big issue. So when you guys look at your library today, like roughly what percent of your content do you think is photorealistic versus, call it, creative?
Well, it's a great question, and it's funny. It's not often a question that we are asked. But when you think about illustrations, right? So something that is not taken with a camera, but is an illustration. Illustrations are only about 15% of our total content stack, and so the vast majority of our content is either a vector or a photo, right? And I think that's really what you're getting at, which is generative AI is very good at replicating illustrations, but is not particularly good at replicating an actual underlying photo. And so it's very good at, effectively a creation of a dog playing basketball on Mars, but not very good at depicting a couple on the beach in the same way that a true photographic image is.
Yeah. And do you think that those kind of, that delineation poses different competitive risks from generative AI, as in, like, the illustrative library could be at much higher risk to generative AI innovations than the photorealistic side? And I know Gen AI is going to get better at the photorealistic side, but just at least as this is today, different competitive risks?
Yeah, I think so. I think there are companies that really do a lot in terms of illustrations, and those illustrations can be more easily replicated at this point in time. But I still come back to the actual experience of using generative AI, where you have to wait 15 to 20 seconds, and there's 4 to 8 low resolution thumbnails that are returned as part of the search results. The efficacy of that if you really try and use that for digital marketing, as compared to going to a site like Shutterstock, putting in your search criteria, and then having hundreds of thousands of images that are returned in a matter of less than a second.
But they don't require any editing.
That don't require any editing, that you're then able to page down, right? And the simplicity of being able to page down and scroll and look for exactly what you're looking for and find exactly what you're looking for and apply filters to the search results that have been bespoke created for digital marketers over the course of the past 20 years. It's really an easier search experience than the generative creation experience is today. It is possible that in the future, generative can return hundreds of thousands of results in less than a second with one query. But I think today there are costs associated with that, and that is clearly not the generative content creation experience as it exists today.
Yeah, I must say I was quite impressed when I was playing around with Shutterstock website. I searched just for, I think, a couple walking on the beach, or I think I searched people walking on the beach, and then you guys actually have a whole host of filters there. Returned, I think, 100,000 plus images, and then you guys actually had filters where you could filter by, well, how many people do you want on the beach? What demographics of those people do you want on the beach? Do you want to? I can't remember those animals, but you were able to ensure it just via filters actually come down to a very specific image you wanted, which in theory is one of the benefits of Gen AI is you can type in exactly what it is you want. And this, I feel like you guys are actually probably using some AI and just better metadata, in short, just to categorize images correctly, so you can do that via filters as opposed to creation from scratch.
Well, I mean, look, on our site, you can use a combination of free-form text for your search, as well as filters. Those are filters that have evolved as creative marketing and digital marketing has evolved. And so when you think about, I'd like a couple on the beach in their mid-40s, it's not because we think it's a good idea. It's because digital marketers are looking to connect with their end customers who happen to be the couple on the beach in their 40s. And so ultimately, the filters that we have and the search capability and functionality we have is a function of what our customers are looking for in terms of the content, rather than us trying to sort of reverse engineer a filter. It's really a function of what they're searching for.
Interesting. So last topic, GIPHY. Maybe to kick it off, talk a little bit about competitive dynamics in the GIF space. So, when I'm sure anyone listening to this has sent a GIF, whether it's through Instagram or iMessage, et cetera, talk a little bit about who are the big GIF providers. There's obviously GIPHY, there's Tenor, which is owned by Google, but talk a little bit about the competitive dynamics and how you view GIPHY within the GIF ecosystem.
Sure. So, GIPHY is really the juggernaut in this GIF ecosystem. In terms of the size of the library, in terms of the daily users and the impressions, this company is a juggernaut. 1.7 billion people a day use a platform and either search for GIFs or send GIFs, generating 15 billion monthly impressions of GIFs. And so this is the largest platform. It's deployed in over 14,000 API partners globally, which would include every major messaging platform that they've developed an integration with. And so the size and scale is really inspiring. I think what got them to this position, which I think is not clearly understood, is GIPHY controls the inventory of GIFs that is deployed on all of these major platforms. And that content is a controlled content environment where the content is effectively scrubbed. And it's scrubbed for quality, but it's also scrubbed for the type of content that it is. So you're not going to see things like illegal activity. You're not going to see things like pornography. You're not going to see things that are unacceptable through the messaging platforms that are accepting the GIF inventory. And so that is one of the things that contributed to, the rise and the size and scale of GIPHY as a platform. So, we couldn't be any more excited about the distribution capabilities that they have today, the ability to control the inventory and bring new GIF content to market. And we really feel like this is a tremendous team that has a great entrepreneurial spirit and is going to do some amazing things as a part of Shutterstock.
Yeah. I mean, it's easy to get excited about the big picture opportunity here. I mean, you mentioned 15 billion daily impressions. Pick your advertising CPM, discount it by 100, and you still get to some very exciting numbers. But obviously, big execution risk here. So we touch a little bit about how that the impression-based advertising business model there works. I know this was something that GIPHY was rolling out kind of pre-COVID and pre-acquisition by Meta, shut down. I think you guys are kind of in the early stages of turning this back on, but talk a little bit about how exactly that business model works.
Yeah, sure. And look, I think the first thing to think about is, unlike most forms of advertising, the sponsored GIF effectively is part of the experience of a user. And so unlike an ad where there is a pre-roll and you're waiting for that ad to complete, and that ad doesn't have anything to do with your search intent or what you're looking to accomplish, GIPHY has the benefit of serving up inventory that is responsive to the search intent of the user. And so if you or I are looking to grab a beer together, and there's a Budweiser Clydesdale galloping on the beach that comes up, that Budweiser Clydesdale is additive to your experience as a user. You may or may not elect to send me that particular GIF, but it's not necessarily intrusive, and it is highly responsive to what you're looking to accomplish when you send your GIF to an individual. And so it would be wrong to think of these as ads. It's more correctly product placements in the form of sponsored GIFs.
Sure.
And therefore, it really does not do detriment to the experience, and in many cases even enhances the experience. I'd go as far as to say that the significant majority of the GIFs that are selected are actually branded GIFs. But people love to send brands to each other in the form of GIFs as part of messaging. If you go on GIPHY.com today and you click on studios, you can see some great examples of some of the creative that's been done by various brands that are very, very popular on GIPHY. You can look at videos that have been converted into GIFs that are up there from ESPN and Netflix that are fantastic. You can look at GIF-based product placements that are up there from Dunkin' Donuts, AT&T, Google, W Hotels. I mean, the range of companies that have created GIF-based content for digital marketing is really phenomenal. And the thing is, again, it's not intrusive because it's responsive to the search results. So it's one of the very few companies that can pair advertising and search together to serve up something that's responsive to what you're looking for.
So yeah, I'm envisioning myself messaging a friend via a variety of platforms, and I send them, let's get dinner, I'm hungry, and I want to send them a GIF. I go into the API or on whatever messaging platform it is. It's pulling in a bunch of GIF inventory, maybe inventory from other platforms too, but likely a bunch of GIPHY inventory. I search hungry, and a Domino's pizza box comes up, right? Like, that's something I would naturally maybe send. In that instance, that obviously is an impression you would be serving of Domino's. I mean, that's good brand affiliation for Domino's. And so in an instance like that, it's easy to see how that's an impression. It's easy to see how that's valuable. How much platform cooperation do you guys need to actually, collect revenue here? What data sharing do you need? And in short, you could then send a follow-up email the next month to Domino's being like, hey, Domino's GIFs appeared, 30 million times in GIF searches. We think you should pay us X. Obviously, how's that process going to work?
Yeah, and there are various ways that we work with the various platform providers, depending on their objectives. There are some platform partners that would prefer there not to be branded GIFs in the inventory, and their preference would be to pass directly to be able to use the inventory without the branded GIFs. I think that would be the minority. I think the majority recognize that these branded GIFs are very popular. They ultimately actually drive engagement in that software platform that is being used, which is really the critical factor from their perspective. Some of them are content to let us manage and drive the inventory, and so the economics would accrue to us, as part of the advertising, and it would be because we control the inventory. It's really up to us in terms of what that experience is like for the end user. Others are looking at this as a monetization avenue. I mean, it's been notoriously difficult to monetize messaging over the years. If you look at some of the ways that the email providers have done it, I use one of the older email addresses for my personal address, and every fifth line in my inbox, because I don't pay a premium, is effectively an advertisement. It's not an email from somebody; it's effectively an advertisement. That hasn't really proven to be the most effective advertising mechanism, and it's certainly not the best customer experience. And you can pay a premium to avoid that. This is a way that we can monetize messaging in a way that actually appeals to the customer in terms of the use experience. Because ultimately, the branded GIF is very popular. It's something that people enjoy sending. So I think your point is spot on. I think these are going to command CPMs in the marketplace. Those economics will accrue to us. We're very excited to be able to bring this inventory to market and start to monetize it. And that's something we're sharply focused on through the end of the year.
Okay. And I know the deal only closed a couple of months ago and it's early days. But do you guys have any, because I know they were paying advertising clients pre-acquisition by Meta. That was kind of shut off. You guys are ramping this back up. What's the timeline look like? Are there any paying advertising clients today, or is this still in the works?
It's in the works, but I think much more near term than we would have expected at the time of closing the deal. And so I think we have a high level of confidence that this is going to drive revenue in 2024. We're excited about what that momentum could look like next year. The fundamental underlying technology to be able to track the flighting of various campaigns is intact. And so really now it's a question of signing up our first advertisers and beginning to work with them. And, we're excited about this. I mean, if you think about some of the, the search terms that are used, I woke up this morning and I was super tired, and I sent my friend a gift that said I wanted to grab a coffee. Who would bid on branded gifts for coffee? I didn't eat lunch today, and I was in the mood for a slice of pizza. And there's a couple pizza companies that would really love to own some of the inventory when people are searching for pizza gifts. And similarly, when work ends, we want to grab a beer with our friends. And there's a war going on right now for brand awareness, and we'd love to be a part of that as some of the top brands duke it out for football season. And so, we're really excited about the potential here. And beyond distribution and advertising revenues, we do think there's a great opportunity for us to bring this as an additional content type to our customers. We're always adding new content types for Shutterstock customers. We're innovating in that regard. If you think about this company 10, 15 years ago, it was predominantly image. That's changing very significantly. We expect the pace of that change to accelerate, not decelerate. And so us getting into GIFs, and by the way, you haven't asked about generative GIFs, which will be a thing. Can you generate your own GIF through generative AI technology? All of these things are in the near future, and could be very exciting developments for Shutterstock.
Yeah, no. I share your enthusiasm there. Well, look, those were kind of wrapped up my main questions here. Any closing comments from your side?
No, Spencer, thanks so much for having us. We really appreciate it. Clearly, there's a lot of exciting opportunities at Shutterstock. We're really thrilled to be at the nexus of some of the major things that are going on with respect to content and media and generative AI. And we're really excited to execute on some of our plans in the next 6 months to a year.
Yeah, well, sounds good. Well, Jen, I want to thank you very much for taking time to come on the show. I thought this was a great conversation.
All right. Thanks, Spencer.